Have you ever wondered how to make money in real estate? Welcome to the fascinating world of real estate investing, a field that brims with opportunities for wealth creation. It's a realm where strategic decisions can translate into substantial profits, and where understanding the market dynamics can be the difference between success and failure. Real estate investing isn't just about buying a property and hoping for the best. It requires careful planning, a keen eye for potential, and a deep understanding of market trends. It's about spotting opportunities before others do and capitalizing on them. Whether it's rental properties, flipping houses, or commercial real estate, every venture requires its unique approach. And with the right knowledge and strategies, you can navigate this complex terrain and unlock its potential. So, if you're ready to unlock the secrets of real estate investing, stay tuned. We're about to embark on an exciting journey, revealing the ins and outs of this lucrative field. Understanding the real estate market is the first step to successful investing. Welcome to the world of real estate markets, where location, timing, and a keen eye for detail can make all the difference. Understanding how these markets work is akin to learning a new language, and just as with languages, fluency can open doors to a world of opportunity. Real estate markets are essentially a reflection of supply and demand. When more people want to buy homes than there are homes for sale, prices tend to rise. Conversely, if the supply of homes exceeds the demand, prices may fall. These fluctuations are influenced by a multitude of factors, from economic conditions and interest rates, to population growth and even the quality of local schools. Now let's talk about location. You've probably heard the phrase, location, 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 in relation to real estate, and there's a good reason for that. The value of a property is not just tied to the building itself, but also to where it's situated. A house in a desirable area with good schools, low crime rates, and easy access to amenities can command a much higher price than a similar house in a less appealing location. Identifying profitable investment opportunities requires a deep understanding of these factors and the ability to see potential where others may not. It's about recognizing trends, analyzing market data, and understanding the needs and wants of potential buyers or tenants. It's also about being patient and knowing when to make a move. Real estate investing is not a get-rich-quick scheme, but a long-term game that requires strategy, patience, and a fair bit of courage. In this ever-evolving market, it's also crucial to keep learning and stay informed. The more you know, the better equipped you'll be to spot opportunities and avoid potential pitfalls. Knowledge is power, and in the world of real estate investing, it can also be profit. Remember, a good investor is an informed investor. Now that we understand the market, let's explore the different types of real estate investments. First up, we have rental properties. This is perhaps the most traditional form of real estate investment. It involves purchasing a property and then leasing it out to tenants. The owner or landlord is responsible for paying the mortgage, taxes, and maintenance costs. In return, they earn income from the rent, which ideally exceeds the combined costs of upkeep. However, the profitability of rental properties hinges heavily on the reliability of tenants and the overall occupancy rate. Next on our list are real estate investment trusts, or REITs. These are companies that own or finance income-producing real estate across a range of property sectors. Investing in a REIT allows individuals to buy shares in commercial real estate portfolios, just like purchasing stocks of a company. This provides investors with a unique way to access real estate investment without having to buy, manage, or finance any properties themselves. REITs are also known to provide high dividends, making them an attractive option for income-focused investors. Lastly, we have house flipping. This is a more hands-on approach to real estate investment and involves buying a property at a lower price, often needing repairs, with the intention of selling it at a higher price after improving it. The profitability of house flipping depends on the investor's ability to find undervalued properties and their skill in managing renovations. However, it's worth noting that this type of investment can be risky and requires a good understanding of the real estate market. In conclusion, the type of real estate investment you choose should align with your financial goals, risk tolerance, and level of involvement. Rental properties can provide steady income but require active management. REITs offer a hands-off approach with potential for high dividends. House flipping can yield high returns but involves a higher level of risk and hands-on engagement. Choosing the right investment type depends on your financial goals and risk tolerance. One of the biggest hurdles in real estate investing is financing, but don't worry, there are numerous ways to finance your investment. Let's begin with mortgages. This is probably the most common method of financing real estate investments. A mortgage is essentially a loan where property or real estate is used as collateral. You'll need to approach a bank or a mortgage lender who will assess your creditworthiness, your income, and the value of the property you're interested in. If they approve, you'll get a loan to buy the property, and you repay this loan over time with interest. Keep in mind, though, that if you fail to make your payments, the lender could seize the property. Next, we have private loans. These are loans you get from private individuals or groups rather than banks. Private loans can be a great option if you can't get a traditional mortgage, but they often come with higher interest rates. As with mortgages, you'll need to repay the loan over time, and the property serves as collateral. Then there are partnerships. This is when you team up with other investors to buy a property. You might each contribute some of the money needed for the down payment, and then share in the profits when you sell or rent out the property. Partnerships can be a great way to pool resources and share risks, but they also require clear communication and trust. There's also the option of using a home equity line of credit, or HELOC. If you already own a home, you can borrow against the equity you've built up in it to finance your investment. This can be a flexible and relatively low-cost way to finance a property, but it also puts your home at risk if you can't repay the loan. Finally, consider seller financing. This is when the person selling the property agrees to finance the purchase for you. You make a down payment and then make payments to the seller rather than a bank. This can be a good option if you can't get a traditional loan, but it requires the seller to agree to it. With the right financing strategy, you can start investing in real estate even with a small budget. Let's dive right in. Investing in real estate isn't just about buying properties. It's also about managing them effectively. Now, this might seem like an overwhelming task, but with the right strategies, it becomes a walk in the park. First things first, finding good tenants. This is the backbone of successful property management. Good tenants pay their rent on time, keep your property well maintained, and are likely to stick around for a while. To find such tenants, you'll need to advertise your property effectively, vet potential tenants thoroughly, and ensure your rental rates are competitive. Next up is maintaining your property. This goes beyond just fixing broken fixtures. It involves regular inspections to identify potential issues before they become major problems. It's also about upgrading your property to keep it appealing to current and potential tenants. Remember, a well-maintained property is a magnet for good tenants and a shield against unnecessary expenses. Now let's talk about handling legal issues. This is one aspect of property management that many investors overlook. It's crucial to understand the landlord-tenant laws in your area. These laws govern everything from security deposits and lease agreements to evictions and property repairs. Ignorance of these laws can lead to costly legal battles, so get acquainted with them or hire a property manager who is. Lastly, don't forget about financial management. This involves tracking your income and expenses, setting aside funds for repairs and vacancies, and ensuring you're getting a good return on your investment. It's also about being tax savvy. Understanding property tax laws can significantly reduce your tax liability and increase your profits. And there you have it. Managing real estate investments is a multifaceted task. It involves selecting the right tenants, maintaining your property, navigating legal waters, and managing your finances effectively. But when done right, it can significantly boost your profits and make your investment journey a lot smoother. So, whether you're a seasoned investor or just starting out, remember this. Effective management is key to maximizing your real estate profits. So, we've covered the basics of real estate investing. Let's summarize what we've learned. We began our journey by introducing the concept of real estate investing, highlighting its potential as a lucrative venture. We then dove into the nuances of understanding the real estate market, emphasizing the importance of research, analysis, and keeping up with trends. Next, we explored the various types of real estate investments, from residential and commercial properties to real estate investment trusts. Each type carries its own risks and rewards, and your choice would depend on your individual goals and risk tolerance. We also touched on financing these investments, bringing to light various avenues such as mortgages, private funding, and real estate crowdfunding. Lastly, we discussed managing your investments, a crucial aspect that can make or break your success in this industry. With the right knowledge and strategies, you too can start making money in real estate. So, what are you waiting for?